Hello and welcome to a new episode of the Trading Forex Scanner Masterclass. In this episode, we will look at the importance of understanding the long-term trends as well as the short-term trends and identifying their correlation in order to find the potential best entry prices. So let's have a look here at the yen basket and we will go for a tour again. So as we can see here, we have the downtrend that we have identified in the previous episodes, but in the long-term trend, we can see that the previous trend was an uptrend. In such case, we do not have a correlation between the long-term and the short-term trend. However, it is important to note that the downtrend is way below the lower point that we have here in our range. In such case, the downtrend is still valid. However, we don't have the best case scenario with the validation of the long-term trend as well. Let's continue in our tour. Same thing here. The yen is very correlated in this case. Let's go back to the New Zealand since the euro and sterling and Swiss franc are strong. We have a downtrend here. However, here we have a little bit of an uptrend, and in the dollar, same. This means that in the following episode, in which I will share with you the 5-star rating of the analysis, the star of the long-term trend as well as the short-term trend matching is not, unfortunately, valid in this case. Let's go through another example. We have an Australian that is quite weak at -4. Let's go for a tour. The Australian and the CADs are both weak. Here we have the Australian Swiss. As we can see, we have a downtrend as well as a previous uptrend. Same case for the yen. The short-term and long-term trends are not matching. Both weak in this case, both weak as well here. In the Euro Australian, we have again here a small downtrend followed by the short-term uptrend. So once again, here again, they are not valid. Let's go and find another currency. Let's have a look at the Swiss franc if we have a bit more luck with the CHF. So the Australian CHF, we saw it earlier. So the CADs, as we can see here, we have an uptrend followed by the short-term downtrend. So unfortunately, we do not have again. On the New Zealand Swiss franc, we do not have anything. And on the dollar Swiss franc, we do not have anything, but we have something very interesting with the dollar. So let's have a look at the dollar and I'm going to show you another case. So the best case scenario in which we have a long-term trend, which is the one previous to the gray range that is matching the short-term trends, will be the best case scenario. But there are other cases in which the long-term trend is not matching the short-term trend. As long as the short-term trend is way higher than the previous high, it's still okay, we can still consider it. But in such case, as you can see, the previous downtrend has a high here that is still way higher than the short-term trend. In such case, we need to be much more cautious. As you can see here, if we had a small uptrend, it's still not marking higher points than the previous highs of the downtrends. Let's look at an example. We have this perfect example here. As you can see, the below price of that previous uptrend is still not reached yet by this downtrend. In such case, we need to be extremely cautious. In the dollar yen, as we can see, the low of this downtrend is way below the low of this previous uptrend that we have here, marked in our previous long-term range. In such case, we have the second best scenario in which the downtrend is still valid and we can still consider it. However, as we can see on the euro dollar, this is the third case scenario in which the short-term trends did not surpass the previous trends high in an uptrend or low in a downtrend, and in such case we need to be cautious. That is why identifying the current range trends and still leaving some room for the previous trend to identify the short-term and the long-term trend and see if they are matching is very important for our price action analysis. I will see you for the next episode in which we will have a look at this very important yellow square here that is called the GMT7. Until then, I wish you a happy trading and see you soon. Bye bye.